in your view, then, putting all of these things into perspective, Sandeep, do you think we are going to see this phase of range-bound volatility extending for a bit? Because one would imagine that the kind of trigger and the booster that has come from the Reserve Bank of India would play out in a little more solid fashion. It was beyond what most expectations were. We got a 50 basis point cut and a 100 basis point easing on CRR.
So, see, we have to understand, if we are looking at, when we say that entire 2025, the volatility will remain high, which means, and I also said at the beginning that this year you watch focus should be not on the equity market, focus should be on the global yields and global currency movement, and up to a certain extent, global vol indices also. So if you have tracked these markets, then you could have got much more clarity. I still maintain that from a yields and currency perspective, they will be more volatile this year than the equities market also. And hence, we have to live with this thesis that employed vols of the most of the asset class will remain elevated, and will be a big range that will play out. It's up to us how we capitalize that opportunity. On various forum, I always say, make volatility your best friend. This invisible animal should be your best friend. Don't be get scared of it, because if you are scared of volatility, then you will do exactly opposite what market is demanding. So with that background, I think any sort of sharp rally in the market or any euphoric get build, you prune down your exposure. When you see a panic happening on the market, you rebuild, because India is buy on dips. So you will not go wrong. And this is the way I have seen some of the large institutions globally has worked very well, and LIC is a very classic example in this country.